September. As I told you guys last month, September is the worst month for stocks of the year. And it kept its reputation during this last September as all three indices were negative. As a matter of fact, it was the worst September for all three indices since 2011, which was the last time that we had a debt ceiling fight going on in Washington. But last month, the S&P was down about 4.8%. The NASDAQ was down about 5.3%, and the Dow was down 4.3%. And interestingly, the Dow for the quarter was down about 1.9%, and that's the first time the Dow has shown a negative quarter since COVID happened back in the March quarter of 2020. Now, an anomaly happened, and I'm not sure this is very good for the economy, but in the last month, the only sector that was higher for the month was energy. Now, you know, on the surface of it, or maybe I should say underneath the ground, that being the case is not necessarily good for the economy, because I don't know of anyone that at this point in time that wants energy to be leading the way. Now let's talk a little bit about bond yields. The Treasury bond started at about 1.3%, but ended up the month at about 1.5%. That's actually quite an increase in just 1 month. Now this is probably a reaction to both higher inflationary numbers and maybe some worries about the government spending. But as I said in one of these market updates a few months back, I did not think that inflation was transitory. As much as Jay Powell and the Fed have said that, I don't think it was then. I don't think it is now. It wouldn't surprise me if over the next year or so we're using numbers like 4% inflation, maybe even higher. Well, the reason that this higher interest rate number is really important is because as of late, there has been a positive correlation between interest rates going up and growth stocks going down. And there are a lot of growth stocks that are, leading the way as far as the indices are concerned. So the FANG stocks, the Apples, the Amazons, etc., when they start going down, it has an outsized effect on the indices. So the tea leaves, I think, are suggesting that value stocks maybe are taking the place of growth stocks as the leader. Doesn't mean you should get rid of all the growth stocks. There are great companies in there. It does mean, however, that maybe the growth stocks are a little bit overvalued. The value stocks are a little bit undervalued. Now, what are we talking about as far as value stocks? Sectors including the auto sector, the energy sector, materials, banks. Those are the types of things that we talk about when we're talking about value. So it's real possible that they could take the lead, for the time being. How long that lasts, who knows? And, there's always worries when it comes to the stock market. That seems to be the staple. You're always worried about what the heck's going on with the stock market. But you might have heard the old saying that, we've heard somebody who has predicted 20 of the last 3 recessions. So, they're always worried about something. So, there are a couple of notable things that reared its head in September. One was a company called Evergrande. Now, Evergrande is one of the largest real estate companies in China, I think the largest, and one of the largest, if not the largest in the world. The problem is they were about ready to default on their debt, and that caused a lot of consternation in the stock markets. People were starting to compare that to what happened in 07 and 08 in the United States, but the Chinese government came out and basically said that they weren't going to let that happen. So that worry is, at least for now, it's off the table. But as far as the supply chain is concerned, that issue is a real problem. Businesses just can't get the inventory that they need because there's countries like Vietnam who pretty much closed down because of the Delta variant of COVID, and they just were not shipping out anything. So you've got tons of product that's backlogged, and because of that, prices for shipping have just skyrocketed. On a personal note, a couple of weeks ago, I went to buy some patio furniture. I happened to see the owner in there, and they were unloading a container, and we started talking, and I said, geez, you have no inventory in here. And he said, it is so hard to get inventory from anywhere. And he's telling me about, in particular, this one, the part of the problem was from Vietnam, among others. And he said the shipping costs have just skyrocketed. And he said, so if you can get the product, you're paying an arm and a leg. And I said, well, how much did you pay for the container that you're unloading right now? He said, $22,000. I said, well, how much is it normally? He said, $3,000. And I looked at him and I said, well, you can just pass that along. He says, I can't. I can't pass those costs along. People just won't pay those prices. So basically he said, I'm pretty much just giving it away at my cost. So that is a major problem. And by the way, I did check out to see if he was right about the $3,000. And there's a company called Freightos, which tracks these kind of things. And they said that it cost $3,437 to ship a 40-foot container from Vietnam to the United States. So he was right on target. Now, there are many companies that are having enormous problems with this supply chain. I mean, look at companies like the car companies, GM, Ford. They've had to stop and shut down plants, and probably laying off workers because they can't get computer chips. And so this is a problem. I think the problem will get solved, but it's going to take some time. Now, the good news in all this is that it is a supply problem, not a demand problem. When I look at a company like Ford, they have a tremendous amount of orders for their new F-150 pickup truck. They just can't do anything because they don't have the computer chips. But the demand is there. People want to buy it. So this will get resolved at some point in time. So that's the good news. More good news is that the GDP came in at about 6.7%, which is a really good reading. What that basically means is that people are out there spending money. Now, I do think that will moderate a bit because 6.7%, I just don't think it's sustainable. But still, that's good. People are spending money. The other thing was Congress passed a bill to continue to fund the government. I don't know, some people may not think that's a great thing, but the federal government's going to be running at least until December 3rd. Now, according to Barron's, the biggest problem, though, may be the bipartisan infrastructure bill, which is being negotiated right now. Also, the reconciliation budget that the Democrats are negotiating, and the debt ceiling increase or suspension. So Barron's is basically saying that none of these things are going to get solved quickly, or at least they don't think so. So we should expect plenty of noise coming out of Washington in the near term. So the markets over the last year and a half have done really well. Nothing goes straight up. We know that. It wouldn't surprise me at all if we see an interim sell-off. I think you should expect that. I expect volatility will continue during the month of October. But, with people spending money, with the GDP up a lot, and with demand still strong, unless the government screws things up, we've seen that before, but unless this government screws things up, it looks like I think stocks are still in the bull mode. My bear over here, my Chicago bear, I think he's going to still have to hibernate, even if we have a couple of sell-offs. I think he's going to have to hibernate a little bit longer. Things are still pretty good. Know that probably growth stocks may be a little bit rough. Value stocks probably will do a little bit better. So we'll do things accordingly. In the meantime, we'll see what happens in October. So we will see you next month.